noise in this house. Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house. Let's get some noise in this house. Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house. Oh yeah, let's get some noise in this house.
And they know that they not like us. We ain't gon' do it. The only thing that can stop me is me. If you're doing this for the women you losing, do this shit for yourself. I do this shit for myself.
Style is the bomb, daddy bomb.
Real man of genius.
Today we salute you, Mr. Daily Profiler Statistician.
Mr. Daily Profiler Statman.
While others guess where the market might go, you crunch the numbers, projecting highs and lows with surgical precision.
The high of day, low of day, you've got them dialed in.
London Open, you've measured it New York over-under. You've tested it Asia range. You've logged every tick since 2018.
No lagging indicators for this guy.
Only you can say Based on the last 47 days, there's a 63% chance the high of the day forms before 11 a.m.
Probability never sounded so small.
So crack open a cold one, because trading isn't luck, it's statistics and a really big spreadsheet.
It's Mr. Daily Profiler Statmans.
Good morning, everybody. Good morning, good morning, good morning, good morning. Happy to be back. Hope you all are too.
Man, it's been a while since I've heard that
What up,
song.
what up? What's up, Mickey?
It's been a while since I've heard that song.
I know, right?
Let me share the screen. I think I messed that up.
It's been like a whole year.
It's been since last year since I've heard that. See, that's the one thing we gotta work. I shared my screen and it took over yours. So we gotta work that part out.
Oh, you good. You just switch back and forth like this. Boom. Look at that.
Perfect. Cool. Man, how's your holidays?
Good morning, everybody. Dude, it was a much needed rest. Oh my God. Like, I'm telling you, we get so caught up in this trend. We like get desensitized, just like we get desensitized to money. You know, we're like, oh, we just made $200 on a trade, not realizing how long that takes to make in the real world. But we get desensitized to time, right? I'm just like, you get so focused on every single day, like, all right, new day, new market open, new day, new market open, and you're like, wow, 3 months have gone by, and then you take like a week, 2 weeks off, and you're like, wow, I'm ready to get back to it. So how was yours?
It was great. So I continued the Santa rally, but I did very limited trades. I either took one 1800 trade or I traded to 9:30 to 10, but I was done by 10 o'clock each day. So it was pretty nice to see, hey, you don't really need to be spending all that much time behind the charts, like obsessing about it. You got time to come into the markets, take your trades, and then go live your life. Right, which is the whole reason most of us got into trading.
That's the whole point.
Mm-hmm.
Well, that's even the dopest part about statistics, guys. Like all of y'all watching right now, one of the things that statistics, like it I guess it gives you like this level of confidence that discretionary trading, it's really hard to have, and that's the repeatability. Like the evidence that whatever you're going to do on this chart, it's going to happen more times than not. It's not going to happen every day exactly the way you want, but you can even sit here with an abundance mindset. Like, dude, I know that my brain, my prefrontal cortex, all these little components within my brain that is involved in making decisions on the chart and being level-headed every day, it's a muscle just like anything else, right? Like it needs rest. And so if you're this trader that's always every single day, like, I got to get to the charts. I got to get to the charts because today's my day. I have to win today. So that way it makes up for yesterday and blah, 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 blah. Like when you use statistics, you're like, okay, cool. Like I can give myself a week off. I can give myself 2 weeks off because I know the same moves are going to happen and repeat. It may suck because I miss a few that just are perfect, but I know that that's going to repeat it as well. Just like the choppy days are going to repeat, just like the beautiful delivery days are going to repeat. I mean, it's a repeating machine.
The cool thing is like it's either going to work or it's not, and like statistical based trading allows you to be proactive and not reactive. When you're waiting for a zone or a price pattern or a signature, and you're using something that might appear that day and at that time or might not appear at that day, you're more thrown into the reactionary mode, right? When you use fixed constants and you use statistics, things that repeat every single day and you make decisions on every single day around the same exact thing, you can build playbooks. And so, for example, I was talking about how I could just come in and take my trades, well, off of a phone, nonetheless, right? Like, why was I able to do that? Because I spent the whole year making the same decisions around the same fixed constants. So like my playbook was already there. I knew exactly if this happened, this was the playbook that I was doing. This was the risk profile, and this is the measured move I'm trying to capture. So like that's a huge advantage that many people don't talk about. right? But being proactive versus reactive is huge when it comes to trading.
Yeah, man. Hey, I got a question for all the people watching the stream today. Okay, I put it in the chat. I'm being very serious. I want to know your all's plans this year. Not New Year's resolutions, not goals. What are your habits? What are the things that you like, drop them in the chat? It can be as simple or as complex as you guys want to make it. But I want you all to drop in the chat where are you watching from, because that's just a really cool statistic I like to see, all the people from all around the world. But what are your actual plans this year as a trader? Are you going to continue doing the same? Okay, if you're coming here and you're unprofitable, what habit can you literally do today that is going to pivot you in the right direction? Just a small 1% pivot that's going to pay dividends throughout the months and the quarters and the year, that you can just do that one subtle little thing that you can do today. And I want to see, because if you don't have anything and you're one of the people that do know what you want to do and you drop it in the chat, that's going to help somebody else. They're like, oh, that's going to spark something within them. So blow up the chat. We got what, 71 people in here. And then I have one other favor to ask. Share this stream with somebody that is either struggling, or you want to you find value from these live streams. We do them every single Monday, 8:20 a.m. EST. We give our analysis, we give our beforehand what we're planning for our trades. We show you our executions. I'm sharing an execution right on the screen right now for my overnight trade before we get into the analysis. So drop in the chat, what is your plans this year as far as habits that are going to give you some positive momentum? And then just click the little link button and share this with a couple friends, a Discord, a prop firm. If you're in a prop firm Discord and everybody's losing their freaking minds because they're gambling addicts, be like, hey, you want to change? You want to have some positive change? You want to trade with objectivity? You want to have a little bit more peace in the charts through numbers? Come check these guys out today, because we want to put realistic trading on the map for 2026. That is our main goal this year. All right. So without further ado, I say, let's get into a little bit. I want to blow up the chat. I'm going to click the little show button and read your all's things, but I want to see. So get into a little bit of what I see today. First and foremost, we know that this is a really beautiful in statistic low of day. That does not mean it has to be a good low of day. It doesn't mean it's going to be the low of day, but it is within the 4 major times for us to lock in an in statistic low of day. And what does that mean? That means we have 4 major times that we consistently form a wick on the daily candle, because us as day traders, that's what we're doing. We're taking this big giant daily candle and we're trying to pinpoint, where does this big candle that we trade the fluctuation of, because we are day traders. So I need to hyper focus on the daily candle and how it prints, how it wiggles, how it moves. I need to see these 2 little points. When do we consistently make these wicks on the bottom and top of the body of the daily candle? Now, why is that important? It's important because I can use the process of elimination to see, okay, if I know that this is within the time and price to make a low of day, okay, we made distribution. And when I say distribution, I just mean simple price movement. Okay, so from where the open is, you can see all these little boxes from the daily profiler. I'll let Mickey go even more depth into that. But these little boxes show us, okay, well, cool story, bro, about your time, but how much does price spend? What's the budget? And these boxes let us see, okay, well, we've spent, and within the time to do so, to lock in a potential wick on the bottom or a low of day of the daily candle. And so when we can use that process of elimination to see that that low is a good statistical low, then what about the high, right? What about this high of day that we've made at 7 o'clock? Well, we don't typically make the high of day at 7 o'clock. We don't typically have a statistical high. And then there's these small nuances that do give us high of days around 7, but that's where the daily profiler comes in. The daily profiler says, okay, well, yeah, there's these 4 major times that we make the high day, low day of the daily candle, which is 1800, 3 a.m., market open, 9:30, and market close, power hour, that hour of time. We know those are the 4 major generic times. But then the daily profiler comes in and says, okay, well, based on what we've done overnight, okay, specific variables, we do what's called conditional statistics. Okay, not just a generic statistic of, hey, this is going to get hit X amount of times, like with midnight open. That's just a generic statistic. We retrace to midnight open 65 to 68% of the time, starting at 8 a.m. more than we don't. But a conditional statistic is when we say, hey, when this specific event happens, it bleeds into this specific statistic. But then when this specific event happens, it gives us this specific statistic. And so we can see that if I turn on my daily profiler, we have 3 major variables that we track for what Asia and London does. Of these 3 major, these independent variables, they tell us, okay, when these specific conditions happen, this bleeds into these specific highs of days and lows of days. And we can see that with what Asia and London has done, 3 of the 4 potential low of days have been locked in at 18 to 1900. So that's very powerful information to see, okay, well, then what about the high of day? What about the high of day as far as like because we're coming into market open, right? And that's the next major time to make a high of day. And so I can say, okay, well, this is an out of statistic high of day because it's not within the 4 major generic statistical times, but it's also not within any of the nuanced times within the daily profiler. So then I get to say, okay, well, if this is an out of stat high of day, and this is a bearish footprint, okay, and all a bearish footprint is just the wicks of a 60-minute candle, okay, and is the 60-minute candle different or special than a 4-hour candle? No, I just stick to one thing because it keeps me anchored to one consistent way of executing and looking at the market. And so on the 60-minute time frame or the hour, I can see that we have a major wick here, and we come into it, and the last time we visited this price, groups of people, algorithms, whoever created this sell pressure created these wicks. They left a footprint, and we're either going to respect this footprint and start the mean reversion of the statistics below price, which is opening prices 1 through 7 a.m., midnight open, P12 mid, these levels that I have on my chart. All these levels and statistical retracements, that's what we typically do within the market. That's the mean reversion. That's the areas that we consistently retrace to more than we don't. You can see on my chart, all these opening prices, 70 to 60 to 80% probability of being retraced starting at 8 a.m. You can see these bullish retracement levels up here. You can see midnight open. We know the generic statistic of that. I just said it, 65 to 68%. We know that the P12 mid has a very high probability of getting retraced either in the pre-market or at market open around 9:30. And so we know that, okay, if this is the area of mean reversion, if this is the area, if I just highlight all the, the levels, open prices, all this stuff, turn the daily profiler on. If we know that all of these areas, including the London and Asia OU, here's London OU, here's Asia OU all the way down here. This is a block that I can just sit here, and I don't have to keep this rectangle on my chart. I can just sit here and look at it. I know that all of these areas and all of these lines, all they're doing for me is giving me context. Okay, when I'm looking and reading a map, if I'm lost, what are you trying to do? The first step of land navigation is orientate your map. We learned that in the basics of basic training when it comes to land navigation. You're looking at a map, you're like, okay, where am I at? I got to orientate. I need to see, okay, am I north? Am I facing north? Am I facing south? If I am facing north or south, what am I at as far as terrain goes? Is there anything key on the map that I know that I'm close to? All that stuff. I'm trying to build context of where I'm at on the map. It's the same thing here. I'm looking at a map, in this case, a graph, and I'm orientating it. I'm saying, okay, here's the bid and the ask. Now, where are levels that we are overextended from that we typically retrace to more than we don't? And then how does that relate to the high a day, low a day analysis that we just did? Okay, well, if I know, now let's loop this all together. If I know that this is an out of statistic high of day, and I know that all of these levels, London OU opening prices 1 through 7 a.m., midnight open, P12 mid, it's not that any of these levels are better or worse or, unique. But when I have them all on my chart, I can just see like a heat map where all the probabilities lie for price to mean revert. And now we know, because there's this cool little term called variance, And that's just the variability of something happening, not happening, right? Sometimes it overperforms, sometimes things underperform. We know that all of these levels, none of them are 100%. They're all 60, 70, 80% probabilities. So we know that there's still a 20 to 30 to 40% of some of these not working. So if I know where all of these levels are, like a box, well, I know that the odds are we may take a chunk of them. We don't have to take all of them, but we could take a chunk of them. And that's where Mickey coined the term net. And that's where we can see, okay, this is where price could net, kind of like he calls it kicking a soccer ball into a net, and it takes some of the force away. And that's what we're looking at here, is this netting effect of retracing either all or a portion of these statistics that we typically mean revert to within the New York RTH Open, the New York session. And then where does that relate to this out of statistic high of day? Well, we know that this out of statistic high of day, the next time period to make a good wick or to make a high of day of the daily candle is 9:30 market open. So we know that going into market open, if we in the pre-market, and this is what fuels my trade ideas. So if you guys follow me on Twitter, it's AC_trades. You can, I post my trade ideas, my analysis every morning that I'm not doing this, which is doing it live with you guys. I will build different trade scenarios. I never give myself a bias. Trading, this is the one generalization I will make. I think it's fucking retarded to have a bias in day trading. Swing trading, that's another story. Day trading, intra-day trading, the wiggle of this 1 minute candle can change in a moment's notice. Having a bias where you're like, no, it's only supposed to be going bullish, or it's only supposed to be going bearish, it limits you to being dynamic with a dynamic market. You are here to be a trader, not a forecaster, not somebody that's supposed to be right or wrong. You're here to make money, not to be right or wrong about a prediction. If you're wrong about it, the day being bullish, what is the invalidation to make you wrong about being bullish? Be dynamic with the market. And that's what gives me different trade scenarios. And all I have to do is wait for one of them to line up. I do all the work before I click a button. I don't think about what I'm doing when it's time to click the button. I do all this work now. So when it comes time for me to click the button, when it comes time for me to click a trade, I've already planned it out. I just have to wait. I just have to let this trade set up. So going into the market, these are my different trade ideas. So based on the context of where we could potentially mean revert today, and based on the context of where this out of statistic high is and the information the daily profiler has given us, I can say that, okay, going into New York 1, which is the first range that we really care about going into New York. Let me get it load here. You can see that for New York 1, right now we're not long, we're short, which means just taking this high, taking this low. So if we take this high first and we start attacking these bullish statistical retracements, we start coming up to lock in a high of day at 9:30. This makes me start foaming at the mouth of coming up here and saying, okay, well, if market open, I'm just drawing a box to represent the 9:30 to 9:31 high and low. If this represents market open and we start breaking to the downside, I will be looking for an extended cash flow short, because the higher scenario, the highest probable movement is once we lock in a long or a short for New York 1, we typically go false more than we go true. And what that means is we just take the opposing side of the range. So if we come up and take the high first, then statistically, we're going to take this false around 68% of the time more than we go true, which is just taking this high and never coming back. So I get to say, okay, well, if we take the high first and 9:30 makes a good in statistic high of day, exchanges this out of stat high of day, and then we break below 9:30, I give myself permission to extend my target where I cash flow out of the trade around the highest strike rate move, which is around 0.1%. And then I can let the rest run free to a potential false London OU midnight open retracement. Okay, that's my trade idea number 1. My trade idea number 2 is the true scenario. Now, why do I care about the true scenario? I care about the true scenario because no matter if we go long true or long false, we can see that this is a beautiful low of day. And on the DMP, DWP days, or the directional with pullback, directional non-pullback, just directional day, the days that we just rip and we don't mean revert at all. A classic signature is stacking all these levels below, stacking midnight open, stacking P12 mid, all these levels that we should retrace more than we don't. And I just, and we break above this P12 high and we never look back. So if we break above 930 first, I will give myself permission to take a position, but cash flowing out of that cash flow move, and then trying to see if we get this long true high of day around 11 to basically noon. Okay, with this extended move all the way to previous day high. Because typically, what do? We typically either take previous day high or previous day low. And so if we have previous day high up here at 25,803 with a long true high of day distribution almost nested perfectly within this previous day high, then for the long true movement, which is the lower probability, I still want to leave a couple of contracts on for that potentiality. And then the opposite, if we just, for any crazy reason, I know we're pretty close now, but for any reason we just start crashing down now, I still want to account for the other side of the coin, which is we take the low first, which means we would go short for New York 1. This would be my best scenario for the continuation to the upside, because then we would be taking all these levels in the pre-market, if not 930, and then 930 opens up somewhere around here. And then I would be taking extended cash flow longs for the continuation to the upside. So this would be the easier scenario for the continuation of the day. This would be the the more challenging scenario, which would be taking the high first, because then with a super bullish day like today, we either have that firecracker movement, which we don't really have a lot of levels for that firecracker, or the continuation, which is the break above 930. And then we try to see this long true high day. So my bottom line up front, trade ideas, then we'll hand it over to Mickey here, is we make a new in statistic high of day around 930. I'll be looking for extended cash flow shorts to the downside if we break below. If we break above, I'll be even more focused. I'll probably take even more contracts off at the cash flow movement, with just leaving a couple micros left to run for the long true if that happens. And then the opposite, if we take the low first of New York 1 and we open up the market somewhere around here, I'll be even more excited of joining the long side for a new high of day, new continuation of the daily candle. And then I will not be interested in anything to the downside. Like I will, honestly, this is just a trade I'm not wanting to take. If we break below 930 with a short false open to the upside, there's not a lot of reasons for me to take a short here. I would just happily watch the market bleed without me. So that's not really a trade idea. So the only trade ideas would be if we open up the market here, longs, open up the market here, shorts for the false and the P12 mid and midnight open retracement, and then longs off of 930 with heavy focus on cash flow with just a couple micros for a runner. And that is me, Mickey.
Right, let's go. So if you go to the dailyprofile.com, before I get into my analysis, like we're going to come over to the daily profile. This is one thing that we will be doing in 2026. Austin will still continue to do his wargaming, right? But he's going to be doing them instead of Twitter. He'll be sharing a link to this blog, right? And his wargaming will be on this blog area.
I'll do you one better, Mickey.
Profile. What's that?
Boom. Join our website, top left corner, right there.
There you go.
And
then for me, I'll still do the YouTube war game Tuesday, Wednesday, and Thursday. It's just I'm not going to show the link on Twitter. It'll be under the blog, under his. So I'll just go in and drop the link to the YouTube under his war game, and that's where you will find the war gaming up for the 2026 war gaming. All right, so that's that. And then we'll also be writing articles of what we find important, right? Markets are stochastic at best, chaotic at worst, like different things that we will feel that we want to write about. You can find that there too. All right, so good little announcement. And then, so that's going to be the free side. And then there'll be another free side, which is going to help you run Monte Carlos and grade your trading based off of what kind of expected value and all that stuff that will be free. So look for that in Q1 of this year. All right, so moving on, let's go to the daily candle on the NASDAQ because I start mine here. And would you look at that? We're right at the previous month 50%. Whatever they did on Friday, it looked like a party. So based off of what they did on Friday and what they did on Thursday, we're going to get probabilities of which one has a higher probability, the high or the low, right? So we're going to come on over to our candle science, right? And we know that Thursday was bearish and Friday was bearish. And the one significant thing that we did on Friday was we closed below previous day low. So we're going to come select that we closed below previous day low. And then another characteristic that we see that we take out the previous day high and we take out the previous day low. So that's kind of a big deal, right? So like how many times has that happened? Well, we know that just based off of Thursday being red, Friday being red, and us closing below the previous day low out of the last 20 years, it's happened 460 days. All right. And out of that 460 days, right, how many of those took out both the high and the low? Right. So we're going to select that Friday took out the previous day high and Friday took out the previous day low as well. And we can see that that's only happened 30 other times in 20 years. Right. And in that 30 other times in the 20 years, we can see that only 10%, right? The next day could take out the previous day high. All right. 63% of the time, we took out the previous day low. So now the daily candle is giving us some probabilities to pay attention to. We said that only 10% of the time could take out this previous day high, right? And we're going to do a 0 on this because we're not going to incorporate that today. And we said that 63% of the time, it closed below the previous day low. Right? So we know we're not going to just sell blindly, right? And this is what we do better than most statistical based traders. We learn how to read a live market, right? We know how to trade a line market and align it with live price, right? Right now, if you sold to this low, you're having a pretty bad overnight experience, right? Because the live market is saying that it cares at this point, at this time, without any other context, it's saying it cares more about this 10% than this 63%, right? So one thing that I noticed is that we took out previous day opening, right? And we know based off of whether it's the 1 hour, the 3 hour, the 4 hour, the 6 hour, the 12 hour, the daily, that that's a significant turning point of the probabilities. So we can see that it's still a 20% to take out the high and 60% to take out the low, right? All right, so now we get targets, right? Out of the times that did take out that low, this yellow line represents the previous day low. How far did it go, right? Well, we can see right now, there's not that much data at all, right? So the above reference, so these ones right here, right? Anything above this represents, right, it going into previous day footprint and rejection. Anything low, right, which is this data, is times that we did take out previous day low. And we can see that 50% of the time when we could take out the previous day low, we didn't stay 0.20 below it, right? So that's a pretty good target. And then looking at how we close, could we close below the low? There's a 7% probability. So that's telling us, let's say we do want to come and take out this previous day low right here. Well, we know that statistically, we don't like going too far below it, right? And then when we do go below it and we do take it out, we love closing above it. So if we do turn around and come take out this previous day low, we'll be looking for that characteristic to suck back into the range and close inside of Friday's range at some point, right? So that's what that's telling us, right? And now moving on, right? We know that we have high probability levels from our weekly probabilities. We have right here that can be hit any time of the week. This 0.50 has been hit in 86% of the time. 1% has been hit 78% of the time. 1.5%, right? 73% of the time. So we know those from a statistical standpoint, room for us to keep climbing, right? All right. So that's what we see from this angle here, right? So now we're going to come over here and we can see, right, that we have broken out to the long side, right? So we're long, true, none, and then long, right? So based off of what Asia did and based off of what London did, we're going to go to the NASDAQ, reset filters, long, true, none, and long. And we can see that there is a 50% probability of coming back to touch Asia's OU, but that usually happens between 2 and 3 o'clock. There's a 65% probability that we come back and touch London, but that typically happens between 7:30 and 7:45. We can see that there's a 62% chance of being false versus 37% true. If you don't know what that means, you guys join the boot camp and learn, right? So we're going to go with the higher probability, and we can see that London OU does jump up and increase, and now the dominant time for it to get touched is between 9:30 and 9:45. Well, I find that interesting, right? That's definitely a good target. Now we're going to come to the levels, and we're going to look at the P12 mid. We can see that that has a high hit rate, and that hit rate, right, happens between 9:30 and 9:45, right? All right, so now we know that we have a zone that we need to pay attention to, right? We can see that we know that the higher probability is for us to go up and then to come down, right? By 11:30, something like that. But so when we do that, we know that this, where it says P12 mid and this London OU, where this gray box is drawn, this is the highest probability for it to net and then to make a decision. Does it want to keep selling off and make a new low a day, or does it want to turn around and keep going higher? Right? We can see out of the last quarter, it's got a 61% probability of being false, but from a variance standpoint, right, it's gone false out of the last quarter 6 days in a row. Well, we're on day 6 right now, but 6 days in a row. So we have to consider the true. We have to consider the true side of today because we know from a variance standpoint, we're on the extreme of a false anyhow, right? So think of coin flipping, right? There's no edge in flipping a coin. Heads, tails, 50% probabilities, right? But the edge, one of the edge, and I'll just talk about the simple way of doing it, right? Because others require like good software. But one way to pull probabilities from a 50-50 head flip, right, is the streaks of heads versus tails. Well, this is an easy way to see that, you know, the streak of a false has happened 6 days in a row, but never more than 6 days in a row. And we are on 6 days of a false streak right now. So that tells us that we can expect a true day. So that means when we go to look at a reversal for the false, we need to be more aware of our 4-step reversal, right? So I'm going to be very, very aware when we get to this green box right here, right, which is our targets for this long breakout, right, for the proper reversal signatures. And what that looks like is step 1, right, 9 o'clock. This is the hour. This represents the hour. This is the high. This is the mid. This is the low. And this is going to represent the 9:30, right? I'm going to demand that the 4 steps actually happens, right? Because I'm fighting 12-hour momentum, 4-hour momentum, 3-hour momentum, 1-hour momentum, and daily momentum. All that is all going to the upside. So step 1, can we get below 9:30 price? This green box represents the 9:30 candle, right? 1-minute candle, high, mid, low of the 9:30. That's step 1. Step 2, can we get below 9 o'clock's 50%? Between 9:30 and 10 o'clock, wherever that 50% is, that's a if-then scenario for me to say the market might be reversing for that false. Step 3 is can 10 o'clock take out 9 o'clock's low, right? And then can we put an instead high in Q1 of 10 o'clock? Now, most people will say, why would you wait all the way to 10:15? I'm not. I'm position sizing that of a reversal. So any shorts that I take will be not the whole position. It will be either take the short with lesser position size and shoot for cash flow targets, or shoot with lesser position size and use these 4 steps to add to that position and then cover the queen. So shorts are the lower probability for me today. Longs are the higher probability, even though it is fighting 2 of the probabilities, right? So right now, like I will target longs, right? Longs would be cash flowing, right? If I get proper 4-step reversals and clean 930 sells, then I will take sells, right? But sells won't even be thought about until we close below. I will expect 930 breakouts to the downside. I will be a little bit more lenient with my longs, and I will buy red candles and insider candles, and I won't require a breakout. But for sells, I will require a breakout candle to take a sell off of, right? And then we will manage it like we do every single day. So that's what I'm seeing. Pretty interesting. The last thing I want to point out to bring up to your attention, right, is the 12-hour MFE for a Monday, right? Over the last year, right? This is saying from whether it's up or down, if we look at 06 to 1730, right? These red bars right here are times for MAE. So if this is what the 06 to 1730 candle looks like by the end of it all, this from the open to this low would be considered the MAE portion of that, right? And then the MFE would be considered from the open to the high, right? Well, this is telling me from a time perspective, right, that there's 2 dominant times on a Monday from 06 to 1730 that we like to put that MAE, whether it be up or down. The first dominant time on a Monday is from 6 to 6:15. The second dominant time, right, is from 9:30 to 9:45, right? And then the median time is from 9:30 to 9:45. So the mode in the median lie from 9:30 to 9:45, which says expect a MAE. Now I'll let you decide, and we use the 4-step reversal to let us decide if this was the MAE, or from 9:30 to 9:45, we put a MAE in to go to the MFE, right? So this is interesting because the day has a very dominant 9:30 to 9:45, just like on a Sunday, right? One of the edges that Austin is currently in the trade for is that we like to, from 1800 to 06, right? We like to put that dominant low of day in on a Sunday from 1800 to 1815, and then from 1800 to 06, make a candle higher, and the MFB is the green. So we're seeing the same effect, right? That he's in a long based off of, but for the MA to MFB. So I'll be paying attention to that for sure. That's what I got, Austin. Let's do it, dude. Good. So I'll definitely be paying attention for a possible reversal between 9:30 and 9:45. If it can't, that's the market telling us it doesn't want to, and keep trading long.
Guys, I am motivated to get this stream out to as many people as possible every single week. And so one thing I want to do, so surprise random $80 giveaway here. So all you got to do, but this is with contingencies. All right, with contingencies. Every Monday, and this is going to be a continuation. Every Monday, if we get 150 live viewers, it's going to trigger an $80 giveaway. So only if we get to 150. Right now we have 95. Okay, so all you got to do, I just pinned it in the chat. I made it super easy. Go to Twitter. The link is to the stream. Just like, retweet it, and reply with any value that you got today. It could be anything. It could be statistics Mickey and I share. It could be a process. It could be how we look at the market. Whatever that you've gotten value from in today's stream, just go like, retweet it, and reply. And then if we get to 150 live viewers, you guys will be the pool that we choose from, and then you'll just make a ticket in the Discord. Super easy. But yeah, $80 giveaway every single Monday that we hit 150.
And if we hit 150, right, I'll give away 5 free boot camp slots.
There you go.
Right. So Austin's going to be the integrity holder, but like whoever the first 5 to retweet will also get a free boot camp slot to either use ourselves or give to a friend. That's for them to figure out. And the next boot camp will be January 17th. And it goes until April.
We got a couple good questions in the chat here. So the first one, Wild Deuces 234. I don't think I've seen you here before, so welcome. They asked, do you have a beta error factor for your prediction, a probability that your model predicts? NM. Oh, never mind. I see it's there. I will say we don't really use what Wild Deuces is talking about, guys, is false negatives. That's really what it is. I will say this. When it comes to statistics, just like in the world of statistics and just like in the world of regular trading, there's gajillion ways to do things. Okay. But the reason why we focus and harp so much on statistics themselves is because they give you some level of objectivity. So that way you can see what's working, what's not working. You're actually able to objectively adjust fire because you see what's working and what's not working. But even in the statistical world, you can get pretty granular and nerdy. And
yeah, show my screen real quick.
Oh, here you go.
This is a dude that has a master's in statistics. I know all about what you're saying. Like this is a level of sequencing that's like I can't teach people that. Like, and at the end of the day, right, our job and what we try to get you through the boot camp with, right, is this right here. Most people get stuck in the education phase, right? The education phase of you've got your favorite guru and guru. And that dude, his whole job is to keep you in that spin cycle forever as long as he can charge you for, right? And so like you see it all the time, all across Twitter. Like you got your gurus, people that have over 200,000 followers, but can't even show you a week worth of freaking profitability on one account. They cherry pick their trades and they just sit there and talk enigma to you, right? Yeah, our job is to get you out of that, right? In a simplified format. And then there's a testing phase. And that's where like the people who made it out of the education phase who said, I will trade and make my decisions off of this, because the most important part of trading is decision making in a dynamic market that's not linear at all, right? The people who finally get out of the education phase, they get stuck in the testing phase, which is I need to find the perfect risk profile. I need the perfect risk profile, and they'll introduce the overfitting and all this stuff, and they get stuck. And just like the education phase, most of them will fizzle out and quit, right? Our job is to get you to and through the education phase in a simplified format, but in a very systematic way, right? And then it gets you to and through the testing phase, right? Because the stuff you learn there is very important. But you always see people say, I'm cooking. Well, stop cooking and start fucking eating, right?
Every year, cooking up something.
So like the reason we don't use these advanced statistics, right, and we talk stats 101 is because we know it's about managing your risk, showing up and making the same decisions off the same thing over and over again, and turning systems on and off, right, based off of what market environment and volatility condition you're in. Like, for example, right, I told you there's a specific way I will trade the 4-step reversal and I'll position in, right? I'm not going to trend trade a risk profile when I'm expecting a reversal and momentum is going up and I'm going to slam all sides down, right? That's not how I do things, right? So we think the more simple that we can keep things, but keep it objective, where it's facts and the market tells you it cares about these things because you got 20 years of data all the way to the last quarter worth of data telling you the same thing, right? I think that's way more important for a trader who's not profitable or even close to being consistent. Right? And it goes back to that proactive versus reactive style trading approach. Yeah, that was a long-winded way of saying no, we don't use that.
Yeah, we like there's value in anything that's objective, and I'll never like when it comes to the world of statistics, you'll never hear me be like, "Oh, that's useless." But there is a level of complexity that if you're talking manual trading, now if you're talking algorithmic trading, that's a whole nother world. But when we're talking manual trading, guys, if you want a rundown of the statistics, I need an MAE and MFE. I need the strike rates of my cash flow movements. And when I say cash flow movements, I mean the low hanging fruit that I can get if I'm half asleep taking a trade. I want the statistics of the day. So where we at within the high and low of day, what levels are getting retraced. So, midnight open, P12 mid, opening prices 1 through 7 a.m., New York 1 high and low. Like, I just want levels that are backed by strike rates that are anything 60 and above, because then now I know that out of a 5-day trading day, I'll be accurate 3 to 4 of the 5 days. And that's really it. My risk profile, like exactly what Mickey said, the power statistics give us objective direction and objective reasons to be logical on bullish and bearish. But then the risk profile is where the magic really happens. When you're able to let that risk play out, you let the red days happen, because they will happen, all that stuff.
Or better yet, you cover your queen and you know how to position size and cover your risk, so you're in a risk-free trade. And that's one of the very first classes we teach, is how to trade off of a risk-free trade.
We got another question here. I want to get to all these. We got 15 minutes till market open. WP Capital says, "Are you planning on trading Russell?" Yes.
Yes.
That's a big
I'm
yes.
glad you said that. Yes, absolutely. Absolutely. And I'm excited about Russell, because like me and Austin, we've been saying for years, like, hey, dude, let's go trade YM. Let's go trade Russell. Like, we see the edge statistically.
Yeah.
Let's stay away from ES, because ES is trash when we like to trade it.
Dude, I don't get, like, I will say this right here, right now. Obviously, people trade ES and make money doing it. I'm not discrediting it. But from a statistical standpoint, I will tell you all, from a number standpoint, just straight sheer, when we break above or below 930, the retracements that price hits, if you compare all 4 indices, and I challenge anybody to verify what I'm saying, because I know what I'm saying, because objective numbers speak louder than people saying, well, no, I feel like I've seen this. No. If you compare all 4 indices, Russell is number 1 at price movement, at strike rates of low-hanging fruit off 930. Russell is number 1. NASDAQ is right there, neck and neck with Russell. And then you got YM, it's like neck and neck with NASDAQ. And then ES is just poo-poo, doo-doo. Like, I don't know how people trade like breakouts and reversions, like when Russell and NASDAQ, like they deliver better. They're just more consistent. The numbers do not lie.
For me, my biggest thing is, like, I like to trade larger size, and I have to, in order for me to trade larger size, right, I have to be able to cover that queen faster. And our ES does not support me being able to cover my queen fast enough for me to trade it. Or Russell and E and Q, I'll have a risk-free trade within a second, like 5-10 seconds on some occasions. But yeah, like we're definitely going towards Russell, especially from an algo approach. Once we get, some of our automation is completed this year, we definitely will be having them trade Russell as well. I think we'll always trade NASDAQ, but
hang up.
Yeah, Russell is way too smooth not to be trading, especially from an automation standpoint. OHLC, MMXM, like I've seen that, yes, we're working on candle science, Danny. Calm down. Golly. There's only 3 devs, and I only let them out of their cage so many times. OHLC, MMXM, yeah, I know who you are, and I've seen you on Twitter, and yeah, like, we don't do month over month. Like, listen, like, my job is to teach you properly. Like, I know what I'm talking about when it comes to aligning live price and with historical data. And I teach it in a way, so for 3 months, it's $30 a month. And I give you a boot camp, a deep down intraday, intimate, hour by hour, which hour stands out. I teach you how to build a risk profile. I make sure that you're trained the same way I was when I was set behind an investment bank. Like, that's the level of education that you're going to get. You're not going to get a YouTube education or a Twitter education where I send you a stats website and it comes with a 3-minute video, and then like you're left there to shoot yourself in the foot when you don't even know what the expected value is or how to calculate anything, right? So like to get access to this data, you will go through my 3-month boot camp. We aren't for the majority. We are for the minority. We do not want the degenerate gamblers who think that there's secret holy grail things out there, because I can prove them all wrong, right? There's a time and place for everything. So like you go through this 3-month boot camp, I train you, boom, then you have access to it all while you're going through the boot camp. And if you'd like to continue using this stuff, you join the pack, and that's part of your mentorship. The journaling software, the data, the candle science, the daily profile, the trade copier, all of it is part of the membership. And if you guys have questions, go to the daily profile, go to FAQ, and it answers most of the questions.
Yeah, we got another one here, and this is just exactly what Mickey's saying. So Johnny says, if we did the boot camp and join the pack and want to go through it again, is it possible?
That's
and
correct.
Yes, 100%.
One thing we're doing
that's
is
kind of the
yeah.
Actually, here, I'm gonna post this. So the reason we structured it this way, because we also I got somebody that said this on Twitter, I think yesterday, and we're just kind of against this. And that's, they said, can we just get access to the dashboard, like just access to the stats? And the difficult thing with that is, yeah, you guys there may be some in here that's super smart, doesn't need to be handheld, and you can just figure it out for yourself. But the problem is that's incredibly difficult and practically impossible to scale, because here's what's going to happen. You're going to say, well, I don't want to go through the boot camp. I just want the indicators and the tools. So you do that, and then you're going to have issues. You're going to have hangups where it's like, hey guys, what does this do? What does this do? And then it would become to the point where it's just like, dude, just go through the boot camp.
And here's the thing.
So that's why we made it that way.
For me, right, from a business standpoint, it doesn't make sense for me to throw you into the fire. I succeed if I produce profitable traders, right? Because let's be honest, the daily profile is a business. The Pack Trade Group is a business. If you don't like that, oh well, right? So our biggest thing is trust and reputation. There's plenty of people on Twitter, on YouTube, that have thousands and thousands of followers. They won't show you a track record. They won't live trade in front of you. They show you after the fact, if then risk to reward tools. We're against that. We want to make sure that, number one, we're transparent and honest, right? We're not afraid to live trade in front of you. We're not afraid to be held accountable. But our biggest thing is teaching you how to think and how to make decisions on your own, right? Because if you can build a trade plan and a business plan that you can be disciplined with, then you win and we win, right? And that's what it's about, right? There's too many wolves out here that are here to freaking, trust me, I was in investment banking. They're there to freaking take your soul, right? With a smile on your face and a knife in your back. Right? Twitter's no different. So our job, and this is why I'm working with Austin, is to make sure that we're doing right for the working class, because you guys get taken advantage of. So whether you like it or not, you're going to come through, you're going to get trained properly. You're going to, by the end of it, you know everything about every risk parameter out there, everything you need to know about statistics and how to read a live market properly. And that's what that is.
Yeah, and I just, if anybody's just listening, I just put the graphic on here, everything we're talking about. Like, this is the 3 steps that we've built this structure. Is step number 1, if you're just learning about us, you don't got to, we're not trying to sell you right away. Look, look at all of our proof. Look at, we keep every live stream up, no matter if we had a great day or a terrible day. And just, we do this live every day, every Monday, and then we do our analysis on Fridays. Mickey does his very quick and to the point war game Tuesday through Thursday. So we have a bunch of free content. And then step number 2 is we do boot camps every 3 months. No, we will not let you in at month 2 of the next up. If you miss it, you got to wait for the next cycle, so we can focus and really be there for the people that do sign up, you get to learn the tools that we do, how we structure all the trades, the strategies, the risk profile, everything Mickey just said. And then if you want to continue using the tools and then also be surrounded by like-minded people that have the same goals that you do, but speak the same language on the charts as you do, maintain access with the tools, watch us now trade it live. You guys get to see what we do on Monday, but then Tuesday through Friday, we do it live in our
all
Discord.
the time.
Now we're trading all the time.
Asia all the way to 1600 now, live trading.
Yeah, we got dang, I should have put that one on here. Here, check this out. Dude, I got graphics for days now, baby. We're organized.
Do what the 90% aren't doing, especially if you aren't making money. Right? You don't be a librarian, don't be a theory boy if you ain't making money, because your job is to make money. Whether you sound smart doing it, whether you're not smart doing it, consistently making money. So if you're not making money, 2025, you said 2026 is your year to make money. Well, you might want to stop what you did in 2025 because it ain't working.
Hey, we got 5 minutes till market open. We have 109 live viewers. Like I said, we gotta get to 150. I ain't doing the $80 giveaway until we get to 150. So 150. All you got to do, like, retweet, and reply to the pinned tweet. This is going to be a every Monday thing. So from here on out for the rest of this year, now I'm sure maybe in 2 quarters, if we keep growing the live stream, it may switch from 150 to 200 or 250, whatever. But as of right now, whatever the milestone is, in this case, it's 150. If I get to it, I will respect it. And if we get to 150 every single week, I'll be giving $80 away to one of you guys every single week. Here's our live traders. We got, I'll go in order. We got Bowie as our lead London live trader. Then we got the pre-market with Miguel, Drez, and Carl. Then we got the New York covered by myself and Mick, with Mickey also in the early morning doing boot camp classes at 5:30. And if he's not doing that, it's wargaming. And then we have Jesse and Cody as the late New York traders. So right when we're done around 10:30, they come on and trade. Then we got the PM session that, as of right now, it's not live trading. It's more continuation of the boot camp classes. And then we have in trial right now. So for the next 3 months, it's Snipey and Kenny. If you guys are watching, they're our Asia traders. We don't have a graphic for them yet because this next 3 months they're on a trial period. We put all the live traders on a trial period to show us, hey, you can be consistent. And if they are consistent this next 3 months, they will be the official Asia live traders. And then starting next quarter, we will literally have official live traders around the clock. Asia, London, early New York, New York Open, late New York, PM, and then we move into re-engineering every day at 4 p.m. Mickey, this low of day trade has some promise.
I'm telling you, like, from a variance standpoint, you're in the clear, dude. Like, well, I'm expecting.
I'm not doing the challenge anymore because literally the final day of 2025, I did it. But
and now the first day of 2026, you're about to.
But I will be taking profit at around 684. I'm not like, I'll maybe leave one micro on, but 684. And the only reason what's so special about that number. So I think I'm sharing my screen. Yeah. So starting from, this is just a measurement off of starting at 6 a.m. It's basically the half of the daily candle. So from 6 a.m. to noon, that chunk of time, like I'm trying to measure from 6 a.m. to 1500 or till end of day, basically, right? But I'm taking the meat and potatoes of the second half of the daily candle, which is from 6 to noon. And what's that median distribution of price movement that we typically will make? Well, this golden box is the current high and low from 6 to noon. And in the past, if I go to the 2-minute time frame to pull the past 7 Mondays, we can see that the past 7 Mondays has yielded 0.96%. So then if I take the current high and low and I just draw 0.96%, that gets me to here. But then again, we have variance. So sometimes we underperform, sometimes we underperform, but I want to lock in the highest probable movement of anything that I do. And then I also want to take into account, if we look at the day here, we're long for New York 1. So we're typically going to go false more than we go true. So if I account for the potential reversion back to P12 mid, then I'm going to anchor my distribution, the measurement of the total price movement we could expect. P12 mid is 481. Take the low here to 481. 0.8, which is just taking, an even smaller portion of that 0.96, and that gets me to 684.50.
So you're taking, I'm going to be looking at RTY, you look at NQ, since majority of people are trading NQ. Damn, RTY is not fun.
I just retired from the military after over 20 years. This is my first attempt educating myself. Let me tell you that boot camp is the best decision I made. Let's go.
Let's get it, dude.
All right. If you need me to switch or anything, just let me know, Mickey.
Yeah. I don't need it right now. All right. Russell's open.
All right. First thing we do is we always let the 930 open up, see what the range is going to be. Dude, I may hit TP here.
Hell yeah.
Oh,
Russell's pushing it up, man. Golly, Russell moves. All right.
All right, so what I'm going through now, like what's going through my mind is the 930 is opening up. We got 20 seconds left. Currently, the 930 range is 0.2%. That tells me that, okay, decent range to define risk with. If we started getting 0.25 and above, then I start using the 75% of the range instead of the other side of the range. And I also want to see, okay, now that 930 is about to equalize here, boom, we're done. 930 range is set. If we get above, what's up?
Just letting you know, like for Russell, like I took the longs around the 9 o'clock's 50%. Like it's right here. Took 3 RTY. Already took 2 off at 10 basis points. So I got 1 running.
Okay.
Because this motherfucker moves fast. I don't know. Like I don't know what to tell y'all with Russell. You either shit or get off the pot. All right, you're good.
No, you're good. I'm just being patient here, waiting.
All right, NQ, come on. NQ, the higher probability is a sell, but if it's going to go true, this is the day for it to happen, right? It looks like you guys might be able to get a good sell on it.
Yeah, I mean, we've cleared all stats to the upside, so the mean reversion is there.
We definitely need to get some candle science data on. Dude, I forgot to do RTY. Let's see.
All right, so we're breaking below 930. So if you guys want to see my low of day trade, I'm going to take one more contract off right now. It's now locked in even more profit, keeping this up. And then going back to 930, we got 20 seconds left.
All right.
All right, I'm short.
Nice.
Stop
I am
loss
out
is
of
right above 25%.
Oh yeah, I am out, and I'll show executions. I am out of this long on the Russell. Right, so we share my screen. Right.
1 second here.
Oh yeah. Worry about your trade first. My bad.
Just setting my orders. Okay. There you go.
All right. So we know that Russell's in the same scenario that NQ's in, right? Where it's higher probability to sell off and do a false move, right? So I said I was going to be cash flowing targets only. So when we broke out, like I said, in the war game, if I'm targeting longs, I will grab. I'm not waiting for the breakout. I'm grabbing them and I'm going with them. If we're taking sells, I'd wait for the breakout candle, right? Because 930 exploded higher, I grabbed it around the 50% of the 930 right here, and then ran it up to here, covered the queen, and then just TP'd for cash flow move. And this is the trade right here, right? And that's all she wrote, right? Now I'm going to be looking to see if Russell wants to sell to take us to the false, right? That's a great 930 short for everybody who's in it, right? The higher probability is the sell, right? So you're not in the wrong if you're in the sell. I know Austin's in a low day trade, and that's fine because he can still win because the probability of a new low day is less, right? But there is higher probabilities to come to London OU and P12 mid and then reject that to make a new higher day. So if you're in the sell, please follow your fucking trade plan because that's a higher probability move. If you're still in a low day trade like Austin is, you're still good, right? Markets don't just go straight up and down, right? They go in a sequence. Oh, you're in a sell, dude. Is this the same account?
Well, no, this account is still long too.
Nice.
And then my main trading accounts, I'm short for cash flow is at 568.25. I'm basically hedging right now.
Okay. I love it, man.
Obviously, they're not the same accounts because prop firms don't let you do that, but this is the part of the hedging world that honestly, this is what hedging like with intention is, not just buying on one account and selling on the other.
I love that you took a sell because that's the trade that we take on this time.
Cash flow secured on that. So I'm changing my stop now for 2 more micros. I'm 2 micros left. I'm going to place 1 micro at the New York 1 low right here. This is the firecracker. Mickey and I salivate for. So I'm taking 1 more micro off at 521 even. And then my final just home run target is if we come down here to P12 mid and midnight open. But this is where, honestly, this is where I love the way that I trade because like what Mickey was saying, like, do I think we're going to make a new low of day? No, but you can make money being long and short. I don't give a shit what prop firms make you guys think about hedging. You can hedge and actually hedge the right way. And this is where, okay, this is a good high of day with all these statistics below. And so we either going to have 2 scenarios. The higher probable scenario is now at a minimum a mean reversion to New York 1 low, midnight open, P12 mid. And then if you guys see this, it kind of looks like a volume profile. Shout out to Trades Don't Lie, Andrew. He updated one of my indicators here and killed it. What this shows you is the bulk of distribution, the bulk of favorable price movement that when price breaks away from 930, this is the MFE or max favorable excursion, or another fancy word for just favorable price movement. So if it's below, it would be down. If it's above, it'd be up. And you can see the bulk of this favorable price movement when we break below in the past 75 days, because this is looking at the most recent market, is around here, this box of movement here. And so I'm saying, okay, well, if I've cash flowed the trade, okay, if I took a high strike rate portion of this move, okay, we don't trade 90% hit rates, 30% or 70% hit rates, whatever, for the whole move. I want to de-risk at where we typically do 70 to 80% of price. Okay, that de-risk, what Mickey calls protecting the queen. Then I'm like, okay, well, now what is the rest of my position? How can I maximize the times that we greatly dramatically go outside of that high strike rate movement, the lower portion of the move? This is where the rest of these levels and everything comes in. I can see, okay, if we're going to now extend away from 930 a little bit past the high strike rate portion, we got New York 1 low right here. We have 3 bearish levels right here with 70%, 80% right here. We have the bulk of MFE, favorable price movement here. And then we have opening prices, midnight open, and P12. So then if you want to picture it as like a heat map of highest strike rate to lowest strike rate. Highest strike rate is here. Medium targets to, medium price movement is here. We have the gunship. It's this very faint green line you can see forming here. And then the home run trade, the rest of the move to maximize my position would be here. P12 mid, midnight open, and the other side of the tail of this distribution. And that's the trade live.
Freaking amazing. All right, so I dropped in the YouTube. Let me drop it real quick. All right, and like I want you guys to read an article that I published. All right. I mean, I have stuff here, like if you deal with dopamine and greed, read that. If you deal with exiting the trade too early, read that. If you don't understand what kind of market you're in and how to turn systems on and off because the market's dynamic and you have to be non-linear, right? Read that. But this is the one I want you to read, right? And I'll drop it in the YouTube, right? And what this is going to tell you is going to give you a free risk profile. And that risk profile is built from 10 o'clock to 1500 of over 16 different strategies. And the one thing that it'll show you is that out of that 16 different strategies, do I drop this in the restream chat? And will that work? Let's see.
Yeah, just post it in the...
Did that populate though?
There you go. Yep.
Oh, cool. And so like, read this, because if you don't have any clue, like, okay, so another shout, because like, if you listen to me long enough, I'm going to call out all the bullshit from all your little 200,000 follower idiots that can't even trade, right? I'm always they're going to tell you like, this is where you place your stop and this is where you place your TP, right? And they're going to give you the cool little PDF that goes along with it, right? That's not correct, right? What you should be doing is you should be collecting the data to say, where is the data telling me where my stop should go and where my TP should go. So this article will kind of help you start beginning to see what that looks like and how to do that, right? So if you're new and you don't know how to do that and you are stuck in the buy my PDF for $69.99 cycle, right? Read the article and, start doing it yourself. Dude,
yeah, daggone it.
Short. What a great short. RTY is not playing very well. RTY is like, we're going to the moon. Let's see, what is RTY doing now? Yep, RTY is going to the moon.
I'll tell you guys to answer more about somebody asking, am I going more into RTY this year? I'm telling y'all, we're just waiting on the gunship to be done. And the development of this freaking thing has been the bane of my existence, because apparently getting things built is like, I don't even know. Like, I ain't going to go there. But anyways, the gunship is going to solve that issue for me. So that way I can be just hyper focused on trading one instrument. RTY is going to be the major instrument that's going to be trading alongside of it, to where I'm basically using the gunship to passively get me into the trade. So it's not like an algo where it just buys and sells where I'm wanting it to, as far as like this trade, the 930 trade, but it'll be Russell will be on the gunship and it'll just actively get me into the trade, or passively get me into the trade. And then I can just, okay, I'm in the trade. Let me go back to my chart. Let me set my TPs like you see me do here. And that's it. But it's just, guys, the pack trade group can let you guys know, the pack members in the chat can let y'all know. I have been, I started development, like as far as like paying my first ever developer to get this dang thing built back in May of last year. Okay. Spent like 4 or 5 months wasting time with somebody that apparently just is the best coder in the world. Couldn't do it. So got a refund from that. Now trying to do it again. Don't know where they're at now.
I'm telling you, they don't want to bring this thing false, man. New 15-minute in 2 minutes. Like RTY can't do any of the steps of the 4-step. YM is just gone. There's no chance in hell it's doing the 4-step reversal. ES is gone, not doing the 4-step reversal. NQ's doing a 9:45 reversal right now, possible. But yeah,
See.
let's see, dude. When that dumb old gunship gets done, watch it be a Marine. Watch it be another veteran, because it's always another veteran that makes shit happen. I hope he can do it. If anybody can do it, that guy can.
Man, I'm telling y'all, like, if you're listening to this and you're a developer, I'm sorry if I offend you, but y'all piss me the fuck off sometimes. Jesus, man.
Hey, if you're in the pack trade group and you took a 930 trade, drop your results in the chat. Like, win, loss, doesn't matter. Like, what'd you do and how'd you do?
Let us know, baby. The MFE of this short was, so you've had 0.23% of price movement. And look, I mean, this is the live market on top of this indicator. You can see this. This is the 50% percentile. So basically, this is the mid, the 50% strike rate, whatever you want to call it. So anything above this peak here is above 50%. Like this is your higher strike rate movement. And look at what price did. It came all the way down to here, failed to get the rest of the false. And now this is good for me, because now if the rest of this position gets stopped, I'm actually going to even put my stop here to 25%. So it's going to be even less. So if this comes all the way back and stops me out, we break above, I can join the long side. I've gotten paid for this trade already. And then I can take a stress-free trade and to the long side for the long true high of day and the price movement up here. And then for my overnight trade, cool. I've gotten paid 1, 2, 3, 4, 5 times in this trade. I'm only 2 micros left. If we do the true scenario, I have 1 micro at my 684.50 target, and then the rest will be I'll take the final position off at noon EST. No. Trades don't lie. Not you. You, Jerry, Vlad, Pascal, Arnie, all you guys, y'all are cool. It's other people. I just want this stupid thing done. That's it. Like, I'm telling y'all, when the gunship is fully built, I'm never, ever, Mickey and his team can deal with all future development problems. I'm done working with getting things built. I'm done because I'm a control freak and I like to do things that I can control. And when I don't know what the progress of a project is because I can't get in contact with them, and then it's this thing that's like a very big pivotal moment in my personal trading career that I want to finally start getting results from, and I can't do anything about it. I'm sitting here about to blow my brains out. Okay. So yeah, not you, man. Let's see. Yeah. Drop the trades in the freaking chat, baby. We got 162 by Andrew, 570, the Matrix Brain. Stack short of 933, targeted previous hour mid and 3-hour open, plus 1020 for the day. We got Nick, got 2R on the short break. We got Nick turning into a pirate.
He's a
new
pirate.
Year, new pirate.
All right. Freaking pirate.
Hey, did you guys drop your New Year's things? Hold on. Let's shout you guys out. I told you all I'd shout you all out. I'm going to start at the top here. We got Pack Trades. Cody says, my plan is to not be an F-tard. That's a really good plan this year.
That's always a good plan.
We got Tuesday, 695, Canada. So we're watching from Canada. My plan is to find my kick, the thing I will repeat over and over again and be confident that it will make me money, even when it has lost me money 4 days in a row. And that's telling you guys.
A beautiful, yep, that's where it's at right there.
It's the most magical feeling in the world because you don't need anything else. Like the strategy, the kick, the thing that you're talking about Tuesday, if you're still listening, the kick is the easiest part. Okay. It should come natural. If you guys, this is one thing I'm a firm believer in. if you guys have been watching this market for just a year, okay? Because when people try to get on this bandwagon and swinging their dick around, you got to be in the market for 7, 8, 9 years. No, you fucking don't. No, you don't. You need like 2 quarters, 2 tunnel vision focused quarters, half a year, 6 months of just straight obsessing over this market. When you do that, you've seen almost every wiggle the market can give you. Yeah, there's different presidents. Yeah, there's different market regimes. I don't give a shit about that because I know statistically we make the high day, low a day. Exactly. The high day, low a day is made within the 4 major times more than they're not. We retrace to these levels more than we don't. These things are repeatable. Do they have different little rhythms and wiggles? Yes. But the majority of this market does the same thing since it did when electronic trading was first ever available. And
there's 2 problems.
So the kick is the easiest part.
Yeah, there's 2 problems you solve. Is the daily candle going to be green or red? Is it going to be big or small? That's it. Next. People overthink it.
The hardest part is just sticking to it because you can't go through 3 days of losing in a row, 4 days losing in a row. That's the golden ticket.
Yeah, like that's the most important part. That's why like you train based off the worst case scenario. You position size off the worst case scenario, especially in the beginning as a young trader. You can get fancy with it like you see me do or you see Austin do because we've been trading the same systems forever. I know every type of risk profile that any of my systems have. I know every little wiggle. I know every little part and I didn't do that by backtesting. I didn't do that because YouTube taught me it. I did that by making the decisions in a live market enough times, right? But in the beginning, you should be always trading based off that consecutive drawdown and the max lose streak, right? Because if you can survive that, that dog can hunt.
And knowing that is power, right? We don't try to predict like what Mickey said with the losing streaks and stuff. We don't try to predict as in like, I need to know this data so that way I can now predict my future gains. We know and get very intimate with this data so that way when it comes time to clock in your ticket, your fraud ticket, the ticket of I can't get 10 points to save my life, you know that this is expected. It's not common, but this is to be expected. And you maximize the days that you do see it clear. You maximize the times where you're like, okay, in stat high of day, all stats below, great, everything happened today. But then guess what? Tomorrow I could have the same presentation in stat high, all stats below, and the market says, cool spreadsheet, bro. I'm going to chop you up 3 times. Then we're going to your stats. Like,
so I'm going to give away
you maximize the day so you can protect yourself. Yeah, go ahead.
I'm going to give away a free boot camp because I'm looking at Twitter. Some dude named Trades Don't Lie shared and said the best day trading stream out there. So Trades Don't Lie, DM me, you get a free boot camp.
Heck yeah.
That's Andrew, by the way.
Let me see. How many live viewers? Andrew. Dude, we haven't hit 150 yet, guys. I'm being very strict on this. If we don't hit 150, I'm not giving the $80 away.
We hit 150, but for a split second.
Don't you lie.
Prove me wrong.
I'm watching the concurrent views.
Dude, we just jumped up to 102. Look at that.
We got Pippi Banks here. Pippi Banks' goal this year is to get closer to God, and that's always a good one.
Me and you both, Pippi. If you're still here, like that's my #1 goal. And like I started it with a very deep, intense Bible study over the Christmas holidays.
We got Cameron. Cameron is watching from Dallas, Texas, still working on plan, but my 1% is to lock in and complete boot camp and figure out my risk profile. That's a good one. It's a good one. And just always, Mickey says, it's a breathing and living document, right? So even when you guys build your risk profiles, your plans, what you want to capitalize on, your kick, all that stuff, guess what? In another quarter, maybe a little bit different. In another quarter, maybe a little bit different. There's a point in that, right? It's not to be perfect right out of the gate. It's to start. It's to stop cooking. It's to stop building. It's to stop data collecting. Once you get enough data, You just execute, and then you execute for a quarter. You see what's going on. What's the problem? Am I hesitating too much? What's causing me to hesitate? Am I missing trades? What's causing me to miss trades? Is this just getting chopped up a bunch and it's not really getting the same results I back test? Well, what's causing that, right? You find all these reasons that are either bottlenecking your growth or exceeding your growth. You keep doing the things that are actually letting you grow. You try to minimize or find things that are causing you not to grow. And then you pivot just a little bit. You do another quarter of that. You pivot just a little bit. You do another quarter of that. The reason why a lot of you all don't see success or any sort of progress is because you're dopamine fucking addicts. And and in a week, you try to pivot too much. And then in another week, because you're not getting the instant gratification you're looking for, you pivot again. And by the just 1 month into a quarter, you went from here to here. You pivoted like a whole 90 degrees. And now you have a completely different outlook because you're trading basically a whole new plan. Give it a quarter. Give it a good amount of time. And then make your adjustments. Because now you're going to get a lot of data. You're getting a lot of forward tested data that is actually good in quality, not a week of variability change, strategy hop, change to another risk profile, change to another way of just executing. And then by month 2, you don't even have any data to work with because you've been changing so much because you want that short-term gratification. Guys, this is a long-term skill. None of you will have success in a month, 3 months, a quarter. When you guys build your risk plans and you build your wolf tanks for the boot camp, we don't expect you all to be perfect. We expect you to fall flat on your face, mess up 100 times, but in those mess ups, you're going to figure out what caused them so you can plug them, change, plug them, change. And then in 1 to 2 quarters, you could be a dramatically different trader. But if you don't give yourself that permission to submit to time because you're so focused on payouts, so focused on the P&L, you will never ever make you'll just be kicking that can down the road until you come to the realization that the market you are not the exception to the rule. Everybody thinks they're the exception. Everybody thinks, oh dude, no, I'm the one that's going to prove this person wrong. I'm the one that's going to be instantly profitable after having my business plan. All these people say it takes 2 to 3 quarters. I'm going to do it in a month. I promise you, you're not. It's just a tax that we all have to pay. Brooke says being content with enough and walking away, that comes with your business plan, right, Brooke? When you build your business plan, it's the same thing of saying, hey, these are my operating hours as a business. I'm going to open the store at 8, close the store at 5. If I open the store at 5 in the morning and I'm wondering why I don't have any customers, and then I'm also closing the store at 2 p.m. and I'm wondering why all the customers are leaving because I can't stay consistent to my business hours. Does that sound like a good business model? It's the same thing in trading. You have to have clear and defined rules, not a profit target. No, I'm trying to make $200 a day. No, because guess what? You're going to make less than $200 a day. You're going to have red days. And when you give yourself profit targets, you're like, oh, I failed today because I didn't make my $200. You give yourself process-oriented goals. Every single day that I, number 1, operate within my process. Number 2, no matter if I'm green or red, did my process play out? Did my process give me consistent execution that over the long period of time, I'm going to have positive expectancy? You're still going to have losers. But then when you have the winners, is your winning day matching what you've built with your business plan? If it is, that's enough. You have to have a clear defined goal and a clear definition of what enough is. It's why we use statistics, right? It's not because I go back to my screen here. When I take this short, I'm not shorting to 0, right? I'm not trying to short for a 5,000 point move to the downside. I have a clear and defined exit. It's backed by statistics. It's not backed by, I feel like we're going here. It's not backed by some arbitrary pattern. It's backed by, we go false more than we go true. If I am on the right side of statistics, if I do the same execution over the series of 100 trades, I'm going to be right about 68 to 70% of them. So I know that number one, I have about a 30% probability of being wrong on and off sides. But then number two, I have a majority of the reason that I'm going to be on sides. So I just have to let my risk do the worrying when it comes to the times that I'm just not going to be on the right side of the market. But then on the other side of the coin, I understand that there will be losses that are just going to happen. So I'm going to be content with enough, not because I'm being disciplined or not because I'm, doing some mental mumbo jumbo. I'm happy with enough because statistics are telling me where that enough is. I'm having a clear and defined definition of enough, So don't leave anything up to interpretation when it comes to, and none of this is financial advice. I'm just telling you guys what I do. And what I do is I never leave anything open to interpretation. How I get into a trade, how I define my targets, how I define my size, how I define what the high day, low day is and where the high day, low day could be. It is never open to interpretation. And when you understand that when you leave things open to interpretation, AKA dollar figures, how many trades you should take in a day, TPs, when you leave anything, you start to allow human emotion to leak into your trading. And we are just flawed human beings. Okay. We make mistakes and we let stuff happen that we shouldn't. So build systems that you fall to the level of instead of falling to the level of your emotion and discipline. Discipline sucks. Trading just because you're disciplined, that sucks long term. I don't want to do it. I want to be disciplined because my systems force me to be disciplined, not because I have to be.
I like it, man.
I got Kuma. What's up? I've been talking the head off.
No. Definitely keep going, dude. Like, I think what you said is very valid. So Russell's hit its max distribution, hasn't shown any signs of a 4-step reversal. So Russell is turned off for all trades other than shorts, and I won't even content this. I won't sell this unless I get some 4-step reversal happening. I think I'm pretty much done for the day, which I'm cool with. NASDAQ is still below 930, so the false is still in play.
Yeah.
Right? So the sell on
I think we're doing a reverse wet wick.
Yes.
we're wet wicking below to where it's like, do I want it? Do I want it?
Yeah, right.
We got Kuma Bushi. Kuma Bushi says, watching from Japan. We got a couple people from Japan. Primarily a swing trader at higher time frames. 2026, I went to work on my intraday trading, signed up for the boot camp after watching these streams at the... Oh, nice. Okay, so Kuma, we'll see you in January 17th. Ziggy Pack, my goal is to get out of debt this year. That's an amazing goal that gives you a clear head, allows you to execute better because you're not thinking so much about the debt, right? You're not thinking, oh, I need to pay this off or do whatever. Take care of your personal finances. I mean, that's just when it comes to like trading from a sense of power, that's a part of it, right? Like not caring about the money that trading actually gives you is ironically one of the best things you can do to make more money because you're not hyper focusing on the outcome. So yeah, like get that high interest debt out, like focus on your budget, right? What can you actually spend in a month that you don't care about? If you're spending money on evals and challenges and that money could really go towards getting something paid off, that's more of a priority, right? Because if you're still struggling just to consistently have a month of profitability, which one is actually going to pay more dividends down the road? Getting that debt out of the way first, so that way then you can focus on getting other streams of income, or letting that debt gain interest and hover over your mind, building, negative mental clarity, and you're still struggling it's like you're trying to balance two really big things instead of just eliminate one right now, right? You're not giving up on it. It's just put that to the side and just paper trade, like keep up with your craft, but focus on the thing that you can focus on. We got Gian from South Carolina. Nice. Plan is to have a risk profile using stats that eases my mind off the charts. I'm currently in the process of forming this plan right now. So off to a great start, and that's it. telling you guys, stats is what allows me to still be in this trade, watching it go into drawdown, into TP, into drawdown towards my TP, into drawdown. It's what it is. We got Synergia Trading. What up, bro? The real edge is on those small movements. No need to be greedy. That's it, dude. Get your piece of them and get out. And the final one, Matrix Brains goal of the year is to just don't be a retard. And I think we end it right there.
It's always a good one. Just like the biggest thing you guys have to remember, and I know all these little motivation videos tell you this, and everybody says this, and in reality, like, you can do it, right? But only you give a real few shits about if you do it or not. So make sure you always realize that, like, nobody cares if you make money. Nobody cares if you do it, right? Like, we want you to do it. We will help you do it. We will show you the tools, but we're not going to sit there and hold your hand, right? Because at the end of the day, if you don't put the work in, right, to do it yourself, you're never going to maintain the discipline when you're trading by yourself. And me and Austin aren't going to be trading 24/7, and neither will anybody, right, for the rest of your life. So teach yourself the craft, and never look back, and just start learning how to bare knuckle fist fight the markets now. Because, like, the thing that you won't ever get used to until you start doing live trading is the time element of being in the trade, right? Austin's been in drawdown for over 30 something minutes right now, right? It hasn't gone to his little TP. Like, have you heard any inflection in his voice? That's because he's gone numb to losing, to winning, to making money. He's spent enough time to numb himself and only care about making a decision when it's time to make a decision. And that's what it's all about. And that level of proficiency only comes with your decision making in a live market. There's nothing that can replace that. No backtest, no Python script, no Monte Carlos, nothing. Right? Only you practice doing it can make you do it. Just like the best 3 boys know how to shoot a basketball, but they're never going to be in the NBA unless they start shooting the basketball.
If anything, I'm kind of excited about being stopped out of the rest of this position so I can join the long. Because, I mean, it's looking like a really good long true. Either we get a delayed long false, and, because that happens, right? 10, 15, 10, 30, we just start melting or pumping to the New York one.
We just had a false 05 breakout. So, like, let's see if we can, and we're rejecting the 75 level of the 930. So I'm just waiting to see if it's going to put the instant high or low in.
Yep.
Right? And Q is more likely to go false. RTY, though, RTY just says no. We're going to all-time highs, and you can suck it. And so this is an example of a risk profile and a rule set, right? So let's look at this. Will you share my screen? Right, so I have a rule. So instead of looking at the options world and all this complicated derivative this and liquidity that, right? Like, I just use simple statistics to tell me where within the options change we are, right? Most people don't want to think this way, nor do they have the ability to think, knowing the Greeks matter, right? So use the 10-day median range. Well, right, we've met that 100% plus. We met that. We went 35 handles instead of 26 for the 10-day median range. So Russell's met the daily range. We know that it was a normal size candle for the last 10 days. All right, then we use these session distros across the last quarter, right? Because, like, all your little option Greeks and all that, right? Like, the 10-day median range will give me the local, levels that I need, right? And the range that I need for volatility. And for the sessions, right, you can see right here in the last quarter, going 7:30 to 11:30, the median is 25 handles. We moved at 29. So I have no business whatsoever because for my 10-day median range, for the daily range and the session range, we've overextended both of them. Yes, we can keep going to the moon. But my business plan says I don't trade for anomalies, I trade for normal realities, right? And so like now I am on, because we've overspent in Russell, right? Based off of these two measurements, daily and session, quarterly and 10-day, right? Like I have to sit on my hands and watch this long keep going long, and I'm not allowed to sell until I get the 4-step reversal. So I get to just sit here and be patient. And if it does want to sell, cool. If it wants to keep longing, cool, because I know out of the next 1,000 trades of the next 100 days, this is not what normal is. So I'm choosing, even though momentum's up, right? Choosing to sit on my hands and just milk my account with no trades because we're in an abnormal price structure, right? I do a great job. I like to toot my own horn when I point something out. Like if you go into the blog, if you read markets are statistics at best, chaotic at worst, if you really understand what this is saying, like that's what I'm choosing to do. I stay out when the markets are chaotic. I stay in when the markets are stochastic. And I don't mean any indicator. It's a statistical term. But yeah, so I'm flat and I'm staying flat. But that's an example of sticking to your plan because it's all about the next 100 trades, the next 1,000 trades. And like fall into the level of your process. Austin always says that that's what that looks like. And no, it's not too late to join the boot camp. You have until the 17th, and I close it down. I let maybe 3 or 4 more in after I tell Pocket no more, and then it's done. I'll see you in April.
And there's the QR code for anybody that wants to join.
Okay, seriously, I don't understand these QR codes. Right? If I'm watching from my phone, how am I supposed to get the QR code to pull
Take
up?
a screenshot.
And
so
then what?
if you're on an iPhone or an Android, just screenshot the stream right now, and then if you're an iPhone, I can't speak for the Androids, but if you're on an iPhone, you just take your finger and just long click over the QR code on the screenshot, and it'll link you. It'll take you straight to the website.
All right, so I am gonna click on the screen. What did you say, do? I'm on an iPhone.
Here, I'll do it. Check this out. All right, so y'all see my phone? So I'm gonna watch. Yeah. I'm gonna open up the stream on my phone. Oh, look how fancy! Ooh, I
thought that was just for me.
All right, so here's the stream. All right. Oh, it's not gonna focus.
No,
all right, so you just screenshot. So screenshot. Oh, I gotta open it back up here. Join. There we go. So screenshot, or it's just not going to screenshot at all. First, you got to actually know how to use the cell phone. All right. Screenshot. Boom. We screenshotted it. Now here's the image. There's the QR code right there. You just long click it. Oh, I got to save it first.
Oh my God, I did it. That's cool. I didn't realize I could do that.
There's the picture. I'm going to zoom in on the QR code right here. Dude, this is terrible. All right, there's the QR code. Hold it. Hold it.
Yeah, I like what Tuesday's recommended. Here, check it out. All you have to do is go to the dailyprofiler.com. Boom. And it will take you to the website. And then all you do is say enlist. It's at the bottom. It's the most annoying feature ever.
All right, there it is.
Over here.
So when you long click it, it should look like this. And then you see where it says open Safari. So you long click the QR code, open Safari. Make sure it doesn't pop up any porn. There we go. And then there's the website.
Nice.
Boom.
Keep it up, Lod, and I'm about to play a song that will show how boomer you are.
And then when you graduate the boot camp, you can purchase a pack hoodie. We actually got a new design. So if you guys bought these old pack hoodies, these will never be a thing anymore. We're going to have a new design.
The vintage.
Yeah, these are vintage now. This is what the new design is going to be. I'll give you guys a little sneak peek.
We're still seeing your face. I don't know how to turn it off your face.
Here, I'll just put it right on the screen. Boom.
Nice.
So it's going to look just like that. And then it's going to say, fuck your tight stop losses below it. No, I'm joking. I don't know what it's going to say yet. Do we have any other questions before we hop off here? I know there's like a little bit of a gap in time when it comes to YouTube. Reminds me that the post advanced stats check coffee maker X, but now it's Austin's turn. What the heck, Dusky, are you talking about? Check. Guys, why don't you just include the link? It is. It's in the description. Actually, I don't know if I put the new website in. I'll do that. Thank you, Tuesday. I will do that after this stream. So for all future streams, I'll just put the link in as well.
All right. So before we jump off,
I don't know how to switch screens, by the way. It completely is gone. So I don't know where it's at.
Oh my God. Completely. No. Do it like this. There. You click on this thing, turn your face off.
I'm
back.
Completely gone.
There you go. Now it's on your screen.
Dope.
Yeah. I just clicked on the bubbles that had the screens on it. Since we did not meet our goal of 150 views. Although on Twitter it says we have like 1,000.
Oh,
but we're not going to count that.
It literally will count anybody that just watches, and then it'll just keep it.
All right, so check this out. Who in the chat is interested? Who's in the chat wants to join the boot camp? Who has not signed up for it? You haven't signed up, but you want to do the boot camp. Type in yes right now.
Also stopping myself out of the rest of that trade.
Nice.
So now I'm a little bit above break even on this. And then my overnight trade, I still have 2 micros long. I'm going to take one more off here. If we get above 930 at 684.50. And then the final micro I'll be getting off at noon.
Okay. So Wild Deuce and Dougie Freshness both messed the assignment up. All I said was say yes. And they both were like, hi, me, yes. All right. So the 3 that just responded, Rips, you're an automatic guest, dude. You can do the boot camp. OHLC, Dougie Fresh, and Wild Deuce. Right? You guys need to reach out to Pocket Aces, or if you're following me, just DM me, but I'd prefer you reach out to Pocket Aces, right, in the Discord, right, and just tell him that I'll screenshot this right now so he knows that he's expecting you, and we'll get you into the boot camp for free. But you have to share. Did you share the live stream? I know I'm making it up as I go.
But yes, DM me or open a ticket in the Discord is the best way to go about this.
This will be the last time I give out free ones without making sure that you share the live stream, because we are trying to grow, and believe it or not, like, this is a business, right? We're not your friends. We have a business agenda. We have a vision statement. We have a mission statement. That's what we do, right? I don't know why people get their feelings hurt that we operate like a business. Like,
It's
I
a
don't know.
capitalistic society. Like if you're upset that people give their time and expect to have a very minute compensation for their
We give you-
time, then sorry.
We literally give you 12 hours a day. We give you data. We give you journaling. We give you trade copying. We give you algos. We give you indicators. If you don't like it and you can't stand the fact that you have to spend $100 for 3 months, well, piss off and go away. I know a dude that has 200,000 followers that can't even trade. He cherry picks his trade. He's changes the way he trades every single fucking week. Go follow him. I'm sure he'll lead you to success. Welcome to the boot camp. And you want to end it, dude?
Yeah, man.
done.
I'll give you guys a little summary. I'm still waiting for if we break above, because now we're even more showing signs of a long true. So like I said, 2 micros long still from my overnight trade. Right above scratch, right above break even on the short. I just couldn't get that final little push to get my second position off. If I got my second position off, this would be a really nice green trade, no matter if it did come back. It just couldn't get that second TP. But if we get above 930, I will take another stab at this. Stop will be either anywhere between 75% to the other side of 930. We're already showing signs of a bullish 10-hour candle. We took the Q1 high right here. So now if we get above 930, I'll be cash flowing heavy at 0.1% to the upside. And then the rest of the position will be if we make this in-stat high of day around 11 to 11:15. So then if I'm long off of 930, cash flow at 0.1%, the rest of my position will be around 11 o'clock. Then for this overnight position, if my 684.50 target gets hit, great. I get another position off. And then my final position will be off around noon when we make this potential high of day. And that is my trades for the rest of the day.
So for me, right, like, yeah, let me share screen.
Yep.
I'll do it. Russell already turned off all systems because of how much it moved. NASDAQ, the question I'm having to solve, as you can see, Russell on the daily, from a candle science standpoint, is in the 50 to 60 percentile of its reversal higher day zone, right? The problem that we have to solve on the NASDAQ, right? So this is the footprint, the wick, right? Now we know if it does choose the 10%, because it's choosing, this is why you have to be able to read a live market, right? Stats are cool and all, but you've got to be able to read a live market. This was the higher probability, right? Live price is saying, we don't care about this 63, we care about this 10% probability, right? Pretty cool, huh? Right? So, right, what we have to do, number one, we want to make sure that we put in a Q1 low and we continue making Q 15-minute highs from 10 o'clock all the way to 11 o'clock. We continue going up. We're already past the time where we expect the falls to happen. That means this London OU and this P12 mid, right? Those 90%, 80% probabilities have dropped off from a time percent standpoint, right? Now, we expect to keep going up, right? So we're going to keep a nice little pink line, right? Barbie doll pink to be preferred, underneath, and we're going to keep expecting, right, higher prices, right, to that 10% previous day high area, right? We're going to be well aware that we are inside of the wick and that we cannot get above 930 yet. But if we keep going the way we're going, we will get above the 930. We're aware that right now we're in a range 1 price action, range 1 or DNP price action. We're going to keep that pink Barbie doll line underneath the 15-minute lows, right? Just in case we do a late wick, right? So at 4:30 after, we're going to take that pink line and put it under Q2, this 15-minute low. And if we breach that, sells are back on the table, right? But until we can do that, take out a 15-minute low, we expect higher prices. We expect this 10% over this 63%, right? But right now, based off of what I've trained, right, because we're still stuck in 930, we can't get above it, but we can't stay below it. We expect a range 1 day. From a distribution standpoint, it's odd because right? Our 10-day median range we've overspent, right? So we've met the 10-day median range, right? From New York 1, we underspent. So we've been underspending in Asia and New York 1, right? So we expect to underspend in New York 2, and for NASDAQ to be a smaller candle. This might be one of those times where we had an engulfing candle on Friday and an inside candle today, which is fine, right? But that's right now, like we expect this previous day high to get taken out. If it does get taken out, this is our reversal zone right here. But like we're just honestly expecting a range one day, right? That's what I'm expecting. Hopefully it continues going to the moon for you guys who are in longs, but right, that's what I'm seeing. So I'm pretty much done trading. I'm not trading range one, and I'm ready. I'm up pretty good amounts, so I have no reason to keep trading. When you keep trading, you need to ask yourself, and I say this every time because I like to sound like a broken record. When you guys go to place another trade, I want you to ask yourself, does this trade have as much edge as my last trade? So Austin has to ask himself, do I have enough data? Do I have enough edge to replace the pricing of the 1800 low day trade that I currently took? And if the answer is no, because there's a lot of edge in the trade that he's in, and he's got really good pricing, the answer is no, come back tomorrow. Reset your edge to tomorrow. Stop goofing off. Unless you have specific range style trades that you take that have a lot of edge, come back tomorrow. That's all I got.
Yep, there's edge in that for sure. And I'll even say, like, dude, yeah, I mean, I only need like this trade to hit like twice a month, and it's so funny. Like these low a day and high day trades, I only like this trade will make about $1,500, and this is being copied on 3 accounts. I only need this trade on on the funded accounts to hit, and I'm the rest of the month is just eating off 930. So it's a really powerful trade, guys. Don't sleep on the Instat high day, low days at 1800. But other than that, really beautiful stream today, guys. It's 10:26. We have the Ambiguous Hour by Cody and Jesse coming up here in 4 minutes if you're in the Pack Trade group. So if you are, go ahead and head over into the voice chat, and Cody and PTFX will see you over there. If you are just joining and you are about to hop into the boot camp, be prepared to work. Even if you guys just got it for free just now, do not take advantage of just because you got it for free to minimize the value of what you're going to get. So if you're going to come into this because you now got it for free, so those 3 people that we just got on stream, and you're like, yeah, okay, I'll try it out. Just don't even waste your time, because we see it all the time, and we even seen it in the first 2 boot camps we did that was for free. Over half would just quit in phase 2 the second month because you're not making money yet, right? It's not right when you want to do it. We're here to actually take this slow and methodical, not fast and dirty, to get you out of the door. So with all that being said, hope you all have a wonderful, wonderful, wonderful rest of your day. Stay grinding on your freaking goals, and never let anybody tell you that you can't do something they never done themselves. And I'll see you all later. Bye, everybody.
And they know that they not like us. We ain't gon' do it. The only thing that can stop me is me. If you're doing this for the women you losing, do this shit for you.